Hey, if you've been watching my content for any period of time, then you'll know 50% of the challenge is how do you find the money to fund those deals? Today, I'm feeling super excited because I'm with somebody that's funded 2,500 deals in just the last few years. Make sure you watch this video all the way to the end so you know how you can fund your next deals. If you're watching my video for the first time, my name is Saj Hussain, and on this channel I help you get further faster in your property investing journey by sharing with you my 15 plus years of experience. So today I'm so pleased to be with Scott Marshall from Roma Finance. Scott, how on earth do you fund 2,500 deals?
That's a great question, and it doesn't happen overnight. I got started by effectively remortgaging my own house.
Wow.
To do the first loan.
So literally put your house on the line to help somebody else, a property investor, to fund their deal, to start their journey.
Yeah.
That's a lot of faith.
So 15th of December 2010, our first loan completed. It was a £75,000 loan, and I took equity out of my house.
Yes.
I didn't have the whole £75,000, and so a high net worth helped me with the rest of the money, but that's how I got started. So I took equity out of my house, borrowing at one rate to lend to somebody else at another.
Wow. And that's, you know, an amazing thing we see in property. A lot of it is about trust and faith in people as well. I mean, not everything's just done completely on a handshake, but there needs to be a degree of trust in somebody in terms of working with them, investing with them, funding a deal for them. So let's say I'm looking at a regular, a flip type deal. So I want to buy a property, renovate it and sell it on. How could I fund that? What my options there?
That's a great question, Saj. And actually lending is all about the person that you are lending to. Most of the time now we will lend through a limited company, but there's still directors that are behind that limited company. So for us the key is understanding the people that are behind the transaction, their backgrounds, understanding what their objectives are, and understanding how our money is going to help them to make that property good. Yes. And to add value to the property, and what their objectives are, so that we can help them achieve their objectives. Often those are financial, sometimes they are more social, but actually understanding really where our money fits into their journey.
Yes. Yeah. So in a deal like that, let's say the property is £150,000, there's potentially 50,000 renovation needs to be done, and maybe £50,000 of profit in it. So 250 as end value. So what would be the ways that I could get that funded? And I guess the question many people think about is, how can I do it using none of my own money? But we have to be realistic about things. What's a practical way to do that?
Yeah, it's a great question. Funnily enough, you're not far off the transaction that we use as the case study transaction in our business, which is the terraced house in Bolton.
Yes.
Okay, we use that, the terraced house in Bolton.
Bolton, 250,000?
100
By
grand.
street in Bolton, 250,000.
£100,000. So terraced house in Bolton, someone pays £100,000 for that terraced house in Bolton. They spend £20,000 refurbishing it with an end value of 150. Okay, so what does that journey look like? Yeah. And typically we will lend against that purchase price of 100. We will lend 75,000. Yeah. Okay. And then when they've spent the £20,000 refurbishing it, we will then give them that £20,000 in arrears. Okay. So at that point we're at 95,000 on a property that's then worth 150. Yes. The customer can then refinance on a buy-to-let at 75% of the 150. Yes. And if my maths is right, that's 112 and a half. Yes. Is that right, Saj?
Under pressure now. I'll go with your figures.
So at that point, the customer has then refinancing 112 and a half against a £95,000 loan, okay, and therefore they've extracted £17,500 of cash out of that, and we obviously we want that customer to come back to us. They'll use that £17,500 on the next deal, and that's how they roll and build themselves up. Right. Going back to your question, the hardest thing is getting going in the first place. And so therefore we recognise as a business that somebody who is a first-time investor, first-time landlord, often needs the extra help. So that £100,000 terrace house in Bolton that someone is buying, that £25,000 for the purchase, they may need help with that. Okay? But what we say is, as long as a minimum of 10% comes from the customer's own resources, they've got skin in the game.
Yes.
And therefore we don't mind if there is third-party money coming in from family, from friends, from professional property investors, parents, whatever. So that's a sort of general golden rule. We say minimum 10% from the individual. The rest of the money can come from third parties, connected or unconnected. It can be secured, unsecured. And that's how we help lots of customers get started.
That's quite flexible, because a lot of mainstream lenders, traditional lenders, they would just be 75% of the loan, first charge, that's it. The rest of it needs to be your own money. That 25,000 needs to be your own. So essentially what you're saying is that could be 10,000 of that could be your own money, 15,000 could be other investor money, whether it's secured or unsecured in that transaction. And then the 20 grand that they need to get the renovation done, which they can't pull back out. Okay, that's quite a smart way to...
But if you think about it, one of our customers' journeys is no different from my journey.
Yes.
Insofar as that first loan for £75,000, I didn't have all the money, but I believed in myself.
Yes.
And so we know that the people that are going as property investors, they believe in themselves too. So they've got to have some skin in the game.
Yes.
Okay, but I think it's unfair and unrealistic to expect them to have 100%, even to the point now where, we now do 10, 12, 15 million pounds of lending a month. And we have now got, obviously, a long way from the 75 grand first loan that we did in 2010. But we leverage too. So we've got banks, we've got building systems, we've got syndicate of banks, we've got building society, we've got VC debt funds, we've family offices, we've got the British Business Bank that lend to us. We've still got to put skin in the game on every single loan that we do, and so we leverage.
Yes.
And so to expect our customers not to leverage, I think would be naive.
Yes. So in essence, you've got some of your money in, and then you've got backers, various different backers that have helped fund a deal for you. That money is then used to fund investor deals. Now, as sponsors of the property meet, I was always fairly conscious about who we align with, and I'd always heard good things about Roma. And I think what you've just said was the key for me, that it's really about building relationships. Often a lot of short-term finance and asset-based lending, where it's a case of, right, look at the building, we'll lend 70% of that. Something goes wrong, we're quite happy to take that property. We don't really care what happens after that point. But your outlook and approach tends to be a lot more than let's just look at the bricks and mortar.
Yeah, so the vast majority of our industry are what I call property pawnbrokers, where they, as you say, they see a property that's worth X, and they're prepared to lend Y, and they see the equity that's available within the property as an opportunity for them to take money out of that property. Whereas we sit in a very different space. We believe that our raison d'etre, our reason for being here, is to enable our customers to create equity within property. So everything that we do and everything that we want to do is value add.
Yes. Yeah, I was just off camera before we started, we were speaking about an example where I had a deal where I'd used a funder in that way. And really, I didn't have a great experience of working with them. And I thought, yes, that's fine, we got the job done. But hey, look, we're not going to work together again. But your thinking is way beyond that. It's a case, right, how do we help them grow so they come back and work with us again and again? You're
right, and many of our customers are on their 15th or 16th transaction with us. And almost 50% of the deals that we write now are for existing customers. And I think that says a lot about the way in which we treat our borrowers. At the end of the day, we're humans making decisions where we're lending to other humans, and so we have to be able to know. So it's going back to what we talked about before we started, which is know, like, and trust. If you know, like, and trust the people that you are doing business with, when there is a curveball or a nuclear missile that comes from the side, it's then easy to sit around a table and say, right, okay, Saj, how do we work this out in collaboration with each other so that the outcome is positive? And if I think about the 2,500 deals that we've written, of those deals, we've only had 10 where they've ended up on the naughty step. Of those 10, we've had 3 that have resulted, unfortunately, in a repossession, but only one of those have we actually had to step in and actually take control of the property ourselves, because we've known and understood our customer, and enabling them to have a positive outcome actually is key, because a customer with a good experience ends up being the net promoter of your business. And no matter what advertising you do, a customer that sings your praises, actually, you said beautifully before, a reputation is hard to build, that can be destroyed like that. So actually think about the big picture, think about how you can help that customer get a positive outcome, and don't think short term, think long term.
Yes, when I was doing our research before we started working together, I just heard good things about you, and I thought that for me was so important. And it's unfortunate in this industry, there is so many sharks out there as well that really literally are just, they've got an eye on the asset as opposed to really the finance side of it. So if someone's starting out, what is it they need to look out for? What are the kind of key signs? What should they be looking for in terms of who to work with when it comes to raising finance for investment?
That's a great question, and I really strongly believe that, look, we as a lender, we do lots of due diligence on our customers, understandably. So the due diligence that a borrower does on the lender, I think, is just as important as the due diligence that we do on our borrowers. So what are the questions you need to ask? Well, let's start with where does their money come from? And knowing that a lender gets their money from recognised blue chip financial institutions, syndicates of banks, building societies, I think is really important, because you can imagine the way in which we've been due diligenced by those institutions. If we were doing things wrong, and doing things in the wrong way, then from those institutions' point of view, there's a reputational risk for them by working with us, and therefore they wouldn't want to be associated with us. So I think a customer can take a lot of comfort knowing that it's banks and building societies that are backing a lender, or the money markets or wherever, but proper registered blue chip financial institutions, because they then know that they're going into.
Yeah, it's a vote of confidence if you've got institutional money backing you, that they're comfortable doing that.
Correct.
And I guess for you and the borrower, it's a relationship, and it's making sure that you're happy with that relationship right from the offset, rather than entering it being a little bit unsure, because that's just a recipe for disaster.
Absolutely. So if you think about our latest funding line was with the British Business Bank. Well, the British Business Bank is government owned.
Yes.
The government wouldn't want to lend money to us for us to lend on to our customers if they weren't comfortable that we were good and safe custodians of their cash.
Yeah, makes sense.
And it's the same thing, that kind of permeates all the way through the chain. So us understanding our customer, and they as the custodians of our cash, plus obviously our institution's cash as well, knowing that they are going to look after it, nurture it, and help it grow, that's what gives us comfort.
Yes.
And so you're right, it is people doing business with people understanding each other's businesses. There's other questions that a customer can ask too. So, what's your level of defaults been like? What's your level of repossessions been like? How many new homes have you created? How long have you been going? Tell me about the background of the people that own the lender.
Yes.
For example, a lender that's only got, say, property developers behind it. If something goes wrong on those deals, the developer can step in, but that might be their business model. We're not developers. So for us, we want to see our customers
see them succeed,
trade through.
You don't want to be turning up, taking over the site.
No, that is the last thing that we want, because we know that if that happens, we will destroy value. It'll take us longer, it'll cost us more. So we want to see our customer be successful in their own right.
So talking of developments, people getting into small-scale developments, they're first either it's a commercial building that's been converted maybe to residential, or building out the ground, small project. I guess one of the challenges is really how do we fund something like that? So what options are available for, let's say, somebody watching right now looking to get started in their first developments? What sort of funding options are open to them?
Can I take it back one step, which is you've always got to surround yourself with good people. And so we look at the people that are that we're lending to as a team to understand actually whether they are going to see the project, see it through and make money and be successful. If we don't believe in that person or that team of people, we would much rather say no to the opportunity than end up in a negative situation at the end. So going back to the question as to how we structure a deal, how we finance a deal for a, let's say, ground-up development scheme.
Yeah.
That there are three covenants that and we're very open about these covenants that we put in place with our customers. The first one is the loan to GDV. Yeah. The second one is the loan to cost. And then we then work that back to get to a residual day one value, and then we agree a loan to value on the initial day one advance against the residual loan to value. Yeah. So typically speaking, the loan to GDV will be somewhere between 65 and 70%, typically, and that includes the interest that gets rolled up at the end. Right. So we will effectively got models that work out for us what's that customer likely to owe us in 12, 18, 24 months time, based on a number of different, the drawdowns, the dates of the drawdowns, how much money they need, when they need it, etc. We then look at the loan to cost. So the loan to cost calculation is somewhere 80 to 85%. Right. But that is against total cost. Yeah. So the total cost will include the day one value of the site. Let's say it was bought recently. So we take the purchase price, we add on to that the professional fees, the stamp duty, the fees that customers incurred to get the planning consent. Because don't forget, before we see a deal, all those things, before we see a deal, the customer's gone through a whole world of pain to even get to that point there. So the cost element of the loan to cost covenant calculation is all the pain the customer's gone through to get to that point there. And then we then add on to that the costs of doing the build itself. So you take the day one value, either the market value or the purchase price, plus.
All the costs.
Add on to that the build cost itself, and then our loan is somewhere between 80 and 85% of that.
So it's true cost, really. It's really all the costs.
Yeah. And what we then say is we then allow an element of profit, and typically it's 20 to 25%. Yeah. So if we take the loan to, let's say, make it easy. GDV is £1 million, profit 20%, 800. The build cost, let's say, 500. Yeah. Okay, that means your day one value is 300. Yeah. So then we start to put a day one LTV, day one loan in place against the current initial market value. Yes. The costs are the 300 plus the 500, that's the 800.
Yes.
So we'll be at 80, 85% of that.
That figure, yeah.
To the point where we don't want the loan to GDV to be any more than 65 or 70%. Yes. And what we've had to do more recently, because we've seen lots of customers have understandably experienced increased costs, whether they be materials costs or labour costs, we have to put in place a contingency. Because we have to make sure that our customer is able to trade through, we're able to work with them through any
changes,
any challenges.
There's lots of uncertainties in a development.
Yeah, but typically one other thing that's really important is that we want to see our customers' cash go in first, so that they've got the skin in the game.
So it's not, you don't need a huge amount of money to start. You could start with a small amount of money. Yeah. But the key thing I think you mentioned there again is having the right people around you, which then gives you confidence. Even if it's the first development they're doing, they've got the experience around them to make it work. Remember the first houses that we built, I'd never built houses before, it was the first one. But I had a partner who's a quantity surveyor who's experienced building houses, and that de-risks it for me, de-risks it for any funders as well. Yeah,
so we're very clear on what a Roma persona looks like, a Roma customer looks like, and we can categorise a Roma customer as one of three types of people. And sometimes they'll fit in box 1, box 2 or box 3. They might fit in box 1 and box 2. But so the first persona of a Roma customer is the professional tradesperson. Okay.
So that's someone like an electrician, a builder, someone like that.
Yeah, carpenter. So a chippy, a sparky, a plumber, a brickie.
Fed up of making the boss rich.
100, yeah, or even a QS, for example. The best ones in terms of the tradespeople are the carpenters, because contract carpenter will see that project virtually at all stages through the cycle of the development. So the first Roma persona is the professional tradesperson that is looking to do it on their own. Yes. They might have done some smaller projects. This is not the next step for them. So you take your situation. Obviously, you've got you as an experienced property professional, but you then got an experienced property tradesperson that you're doing it with in terms of them being a QS. They've seen lots of things in their career. So we'd understand you, we'd understand your business partner. So Roma Persona 1 is a professional property tradesperson.
Yes.
Roma Persona...
Be thinking about which persona you fit into.
Absolutely. Roma Persona number 2 is the person who is successful in another field. Okay. So we've got lots of doctors, lawyers, dentists, surgeons, pilots, finance people. So we've done a deal for the former finance director at Boots, one of the senior people within Tesco's. And what these people tend to have is they tend to have lots and lots of transferable skills from their other line of work that can be applied to property. And property, really, you've got lots of things that go wrong, obviously, and challenges along the way, but essentially it's project management.
Yes, it is, yes.
It's project management. So skills that are transferable from the different world over here go into form Roma Persona 2.
Yeah.
Okay, so professional person in a different field who's successful, who wants to create some passive income for themselves through property, or wants to build a portfolio or pension or something within property itself.
Yes.
The third Roma persona is the person who is asset rich but cash poor. Okay, who isn't necessarily as experienced in property as certainly Persona 1. Doesn't have the transferable skills necessarily from Persona 2, but actually wants to go into property. Okay. Now, those people, obviously, the risk is much higher. Yes. And therefore, for us, we've got responsibility to make sure that the projects that we're working with them on are not too complex that they are likely to not make them successful. So those people we will grow and we will build with over time deliberately, and we'll work on strategies with them to make sure that the outcomes are positive for those people as well. So they tend to be asset rich, cash poor, but we know that if they needed to knife and fork themselves through a situation, those people can do, because they've got cash that's tied up in assets that they can draw on to knife and fork their way through if we need to sit down on the table and work that out.
So Scott, something very interesting that just occurred to me just as you're sharing that is when someone's bringing a project to you to have a look at how you can fund it and what the options are available, and you'll look at it and in some cases you might say, well, look, this doesn't quite fit or it doesn't work. But actually, that's great feedback for somebody that's bringing a project, because if you're looking at it from a funder, because you're doing due diligence on their deal as well, to say, look, if it doesn't work, then really as the person looking to borrow the fund, they should be taking that as feedback. Okay, what do I need to do differently to make it attractive, to make it an attractive investment?
You could not be more right. Yeah, 100% right. The feedback that we give those customers on the deals that we turn down is just as important for their property journey as the ones that we say yes to.
Absolutely.
And what we want to do is identify those customers that we can work with over time. And just because we say no to that project doesn't mean we won't say yes to a different project that we feel, and look, we're not trying to be judge and jury here, but and sometimes we obviously can get things wrong, and I'm sure we've missed out on lots of great deals that we've maybe not been risky enough on with our customers. But
you do bring a huge amount of experience.
We've been doing it. Well, we've done about 2,500 loans over the past few years, but if I think about the quality of the people within Roma, and there's now about 40 of us, we must have written between us maybe 100,000 different transactions from all the different companies that we've worked for and come to get to where we are now. So there's a huge amount of experience. We like to think that we're here not just to lend money, but to actually add value to our customers' journey.
Yes.
Where if we do things right and our customer does things right, then it's a win-win for all parties.
Scott, I know you have a really innovative approach to the legals to simplify the process, because sometimes things just get muddled. But before we talk about that, what's the best way for somebody to reach out to you? If someone's thinking right now, I've got a deal that I really need to fund, and what we're talking about is sparked some interest. What's the best way to reach out?
The best way, there's a fantastic, very experienced team within Roma. Best way of getting in touch with us, and we've got offices around the country that can meet people as well. Best way to get in touch with us is to initially email us at enquiries@romafinance.co.uk or call us on 0161 817 7481. And what we'll try and do is match up our local salesperson,
Yes.
credit person with our customer. That's the first thing.
So these are people that we talk about that have looked at 100,000 deals between them. They know what they're looking at. They can help and say, look, this is how we can fund it, this is how we can structure it, these are different ways we can do it as well, and put that deal together and make it happen.
One of the real skills that we've got, and people should work with us on this, is we've got a really, really good ability to be able to structure deals that work not just for us, but more importantly, work for our customer. And that's one of our real skills. And we work with our customers, not to give them advice, because we can't give advice, but work with them to give them an option that actually works for them and their circumstances and their situation.
Yes, excellent. So with regards to legals, one of the challenges is sometimes these things can drag on and take so long, and time is of the essence when we're trying to get deals like this done. So how do you approach it that's different to most?
Yeah, we took a long step back in our business, way back in 2016, I think it was, where we realised that when we were instructing an external firm of lawyers, they have their own agenda. They're going to ask the questions they want to ask, that they thought were the right questions, and it became protracted. So we stripped it right back. We as the dog wag the tail, not the tail wagging the dog. And we dictate to our lawyers the questions that they should be asking on the transaction. And as long as those questions get answered, the deal gets done. And what we've done is stripped it right back to bare minimum. We give our customers a copy of those questions. So you get, and there's roughly speaking, 8 questions. Saj, you get a copy of those 8 questions, answer those 8 questions, sign the docs, the deal's done. And so what that saves from a customer point of view is time, stress, hassle, and actually it means that they can get the deal done more quickly, get in the property, get the keys, do the work, and see a successful and positive outcome, and hopefully come back with the next deal as well.
Absolutely. Scott, we could talk for hours. There's just so much there that that's beneficial for people to learn from, understanding how to do deals. To meet Team Roma, make sure you come along to the monthly property meet. They have the regular attendees at the meet, support the meet there as well.
But whatever we can do to add value to your business, I know we've been working with each other for a while now, but this is really, I feel, the start. We've not even scratched the surface of what our business can do with your business and vice versa, how we can help you, how we can help Team Saj Hussain and the property investors that are part of your network. We'd love to do.
Fantastic. And if you've got questions for Scott, or if you'd like to have him back again on the channel, make sure you pop in the comments section below what questions you've got for him. Enough people have got questions. Scott will have you back again.
There are so many things that we're working on at the moment, new products, new processes, which are going to help to revolutionise the way in which the industry works. I would love to come back again. So please, please give me an excuse to come back. Give Saj Hussain an opportunity a reason to invite him.
We've been talking about some really interesting things off camera, and particularly around the BRRR strategy, how you're just going to completely revolutionise that and allow people to accelerate that journey. So yeah, let's make it happen, and we'll see you again soon. Thank you so much.
Lovely, thank you.
Thank you.